Good morning, Mark Soderberg with ADM Investor Services with your morning egg market outlook for Wednesday, November 27th. Well, a mixed trade here overnight in the agricultural space. Corn right now is sitting about 1 to 2 better near session highs. The soybean complex is mixed. Beans are up 4 to 5 cents. Meal prices are about 1 to 2 better, with spreads widening, however, ahead of first notice day on Friday, while oil prices have backed up about 45 to 50 points. Wheat prices are also lower, currently about 3 to 4 lower. The threat of tariffs on imports from Mexico by the incoming Trump administration brought heavy speculative selling into the corn market yesterday as they sold nearly 10,000 contracts. That would still leave them net long at about 110,000. Speculators also sold about 3,500 contracts of meal, while buying about 5,000 soybean oil. Open interest was down across the entire ag space yesterday, largely due to the ongoing liquidation of the D's contracts, with corn seeing the biggest declines, down 36,000 contracts in total. The EIA will give us our weekly ethanol production update here at 9:30 this morning. Production is expected to range between 322 and 328 million gallons versus 326 the previous week, and just below the all-time record of 327 million gallons week before that. Corn usage has been running well above the pace needed to reach the current USDA corn usage forecast of 5.45 billion bushels. So look for an upward adjustment to this forecast in the December WASDE report. Export sales delayed until Friday. Also on Friday, we'll get a monthly update from the EIA on biofuel capacity, production, and feedstock usage data. South American forecasts remain non-threatening with a good mix of rain and sunshine throughout much of Brazil and Argentina through the first full week of December, keeping production prospects high. Inside trade overnight in the December corn prices, we're able to see a nice little bounce yesterday off a test of the 50-day moving average. Resistance still above the market here near the November high at 434 3/4. Strong demand has kept a nice floor of support above the $4 level this fall. However, favorable weather in South America and now the threat of a sharp slowdown in export demand to Mexico would sure seem to limit the upside, at least for now. Jan beans continue to hold support above its contract low, very near 975. That said, however, the path of least resistance to me sure seems to be lower unless we see a weather situation pop up in South America very soon. I would expect a retest of the late summer low of 935 for spot beans, as the market will try to discourage U.S. acres here next spring. For now, I also look for new lows here in the meal with a test of the August 2020 low near $280 a ton. I'd expect bean oil to be the best performer here in the soybean complex, despite the uncertainty of the $1 per gallon blender's credit that expires here at the end of the year. Bean oil stocks do remain tight. And U.S. prices do remain competitive in the global marketplace. Look for a big boost to the bean oil export forecast in the next WASDE report, as commitments have already reached the USDA forecast for the entire 24-25 marketing year. I think as a percentage of product value, bean oil has just bottomed out near 41% earlier this week. And like corn, wheat prices still remained mostly range-bound. Improved conditions here in the U.S., along with ongoing harvest in the Southern Hemisphere, seem to keep a lid on rally attempts. Heightened tensions in the Black Sea region and tight global stocks among exporters, to me, I think will prevent prices from seeing a retest of the summer lows. EU wheat exports are down 30% year over year following this year's disappointing harvest. So a little bit of mixed trade here as we get to the Thanksgiving holiday. Thanks for listening, everyone. I hope you have a happy and safe Thanksgiving.